Netflix is down 20% after hours. They just reported their earnings and their stock price is down to $403. They were trading at $508 before the market closed. So that means $100 shaved off their current stock price. And here's a very quick summary on what has happened. Netflix GAAP EPS of $1.33 beats by 50 cents, revenue of $7.71 billion, which was as expected. The operating income rose by 35% to $6.2 billion year over year. The biggest miss that has happened is adding the subscriber growth in this quarter. And subscriber growth is one of the most important factors when it comes to companies that are streaming companies. So in today's video, we'll take a look at what has happened with Netflix's recent quarter. We'll review the quarterly earnings. We will also look at the price action. We'll take a look at the price prediction from the analyst. So if that is something you're interested in, keep watching and let's get this rolling. Here is a summary of their earnings report. Netflix added 8.2 million net subscribers worldwide, which was below its own expectation of 8.5 million. If you remember, the Squid Games, which came out last year, which was a worldwide phenomena, which generated a lot of subscribers for Netflix in that quarter. And because of that success, Netflix raised its subscriber growth to 8.5 million. However, they fell short in this quarter. The addition of these subscribers brought the company 221.84 million global paid memberships, making about 8.9% year-over-year growth. In quarter 3, additions came at 9.4% year-over-year. So you can already see that there's a 0.5% reduction in the year-over-year growth for that quarter. The revenues came in line with about 16% to land at $7.71 billion. The operating income fell about 34% to end up at $631.8 million, which still beat the expectation of $559 million. The operating margin was also slim at 8.2% versus last quarter's 23.5% and a year ago 14.4%. So you can start seeing that how Netflix is changing. Well, one of the reasons for the operating income to be low is that Netflix was putting a lot of money towards building these content. The decline in operating margin was expected given our large content slate in Q4 this year. The silver lining over here is that in the US and the Canada, they added 1.2 million paid subscribers, which is the strongest growth since the pre-pandemic days. Asia Pacific added 2.6 million subscribers versus last year it was only 2 million. So there's also another growth over there. Latin America added 1 million, which was less than last year because last year they added 1.2 million. And EMEA, they added 3.5 million, but last year they added 4.5 million. The net cash used in operations was $403 million versus a net inflow of 82 million last year. For the upcoming first quarter, it's forecasting just 2.5 million net subscriber addition. Netflix is expecting the subscriber count to stabilize. For example, the two movies that recently came out, Red Notice and Don't Look Up. Personally, I did not enjoy Red Notice. I don't know about you. Let me know in the comments if you enjoyed Red Notice. However, they also have some new exciting content which is being lined up for this quarter. One of them is Ozark and the second one, very popular, is Stranger Things. And there are some other interesting content from both international standpoint as well. Netflix also goes ahead and says that in addition, while the retention and engagement remains healthy, acquisition growth has not yet re-accelerated to pre-COVID levels. Netflix actually agrees to the fact that consumers have many choices to choose from today when it comes to their entertainment. And they also agree that this competition is impacting their marginal growth. However, they're still bullish that they continue to grow in every country and every region of the world. When it comes to the streaming services companies, one of the most important factors is actually the subscriber count. There are other metrics that you may want to look when it comes to these companies. However, in my opinion, I'm noticing more and more that regardless of their revenue beat, regardless of their earnings per share beat, if the subscriber count beats the expectation, the stock always falls. And this is the same case that we saw with Disney. So right before the earnings was trading around $176.90. And when the earnings came out and they missed their subscriber growth, the stock fell all the way down to $158. Netflix after hours has fell $103, which means that their current stock price, if you buy Netflix today, is $403. This company was not trading at this price. Netflix is currently trading at $403 after hours This stock was trading at these levels back in 2020 May. We had this big bull run of Netflix as you saw throughout, and it reached to the peak of $700 and now it's down to $403. So is this a time to add Netflix? Before we answer that question, looking at tip ranks, this company has 16 buy ratings, 4 holds and 2 sells. Their lowest price point is $342, which means that the company is about just $60 shy of getting to that point of low. Question next comes is, the highest is $800, which has been forecasted for Netflix for the entire year this year, and the most ideal scenario would be somewhere in the middle, about $637. So again, now you will see a lot more videos talking about the valuation of Netflix, and just looking at the valuation right now, it does get a D from Seeking Alpha. So from a factor grade standpoint, they do have a very mixed rating right now. The growth is a A-, profitability is still A, momentum has decreased a lot. However, before we begin, folks, this is not a financial advice for you to buy, sell, or hold any of the securities mentioned in this video. So always do your own due diligence before you invest your hard-earned money. So what am I doing? Well, I will be keeping a very close eye on Netflix because we still have about an hour and 15 minutes before the market closes in the extended hours, and it will be very interesting to see how Netflix performs in the pre-market tomorrow. Tomorrow is the third week of the month where a lot of options also expire, so it will be a very interesting day to see if it will be a red day in total or it will be a green day and we'll have a bounce. So my prediction is, if tomorrow is a red day, we can see Netflix even dropping below 400 mark, and that might be a good time to either dollar cost average to your existing position if you haven't bought Netflix lately, or you can open a small position. Well, let me know in the comments what are your thoughts about Netflix, and if you got any value out of today's video, don't forget to hit the like, click on subscribe and ring the bell notification. I will see you next time, Investor Family, but don't forget to invest for tomorrow.